Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Tidewater, a rising tide or a sinking ship. Tidewater Incorporated is one of the largest providers of transportation services for the oil and gas industry. The company operates a modern fleet of offshore vessels that support oil and gas extraction worldwide. With growing investments in the offshore sector and the global economic landscape in mind, it is worth analyzing whether Tidewater stock is currently a good investment. The financial results for the fourth quarter of 2024 indicate that Tidewater remains a profitable company, although its net income experienced a slight decline. Earnings per share were 71 cents, compared to 72 cents in the fourth quarter of 2002. The company reported net income of $36,620,000, slightly below $37,330,000 from the same period last year. Meanwhile, the gross profit margin increased to 50.43% from 47.17%, reflecting better control over operating costs. The net profit margin stood at 10.69%, down from 12.44% in the previous year. Return on equity reached 13.24%, slightly lower than the 14.54% reported a year ago. The company's liquidity has also improved. The quick ratio increased to 1.96, and the current ratio rose to 2.11, indicating a stronger ability to cover short-term liabilities. Financial projections for the coming years suggest strong revenue and profitability growth. In 2025, Tidewater is expected to generate revenue of $1,430 million, leading to an operating profit of $377,160,000 and earnings per share of $4.98. In 2026, revenue is projected to grow to $1,590 million, with operating profit rising to $535,390,000 and earnings per share reaching $8.45. By 2027, revenue is forecasted to reach $1,740 million, while operating profit should increase to $713,089,000, resulting in earnings per share of $11.35. The offshore oil and gas sector, in which Tidewater operates, is currently experiencing growth. Global investments in offshore extraction are increasing as oil prices remain above $75 per barrel. Major players such as ExxonMobil and Chevron are expanding exploration budgets, which benefit service providers like Tidewater. At the same time, the ongoing trade war between the United States and China could impact the company's operations. Potential restrictions on offshore technology imports may increase operating costs. If China limits the export of equipment for the offshore sector, Tidewater could face rising prices for spare parts and materials. On the other hand, if the U.S. government decides to support domestic offshore companies, Tidewater may benefit from favorable policies. Technical analysis indicates a moderate inflow of capital into Tidewater shares over the past 5 days, suggesting investor interest. The stock support level is at $48, while resistance is at $49.60. If the stock price breaks through this resistance level, further price increases may follow. Considering these factors, Tidewater presents itself as a promising long-term investment. The key arguments in favor of buying the stock include strong financial fundamentals, projected growth in earnings and revenue, and positive industry trends. The company is improving profitability and reducing debt, enhancing its financial stability. However, short-term price fluctuations may occur due to global trade tensions and commodity market volatility. Additionally, Tidewater does not pay a dividend, which may be a drawback for investors seeking regular income. In summary, Tidewater is a company with solid fundamentals and strong growth prospects. It may represent an attractive investment opportunity for long-term investors, but potential short-term risks related to global tensions and market volatility should be considered. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU 2016/958 of March 9, 2016, supplementing Regulation EU number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.